Good Tuesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Awesome.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need professional help or advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
And let me share my screen. How's your holiday, Will?
It's good. I think I told.
Will, you're breaking out a little bit. Hello? Hello?
Can you hear me? Yeah, you hear me?
Yeah, I could hear you, but you're breaking in and out.
Sorry about that. My internet connection looks okay. Can you hear me now?
Yep.
Well, my holiday was good. Kids tire you out, though. After 3 days of holiday, I need a vacation.
Get back to work for a vacation. Get some rest. Yep. Well, I hope everybody had a great holiday. If you guys are just joining us for the first time and you have a question, you can put that question on a live chat on YouTube. Will's watching it. He'll read it back to me. If you want to come on the show and ask your question live, we also have a link there to Zoom. If you click on that link, it takes you over to Zoom. Once you're in Zoom, look below. There's a button, raise your hand. Click on that. You don't have to turn on your video camera. Once we let you in, you could ask your question live, direct. Let us know what you're looking at. While we're waiting for questions to come in, we'll just take a look at the pre-market report, get a sense of what's trading in the pre-market hours. I'll navigate to some other reports to get some market insights. Of course, if we do get a question, and that's why we have the show every day, to answer questions. If we do get a question that comes in, will let me know, and I'll take those questions first.
Perfect.
All right. So let's start out pre-market report. These are stocks trading in the pre-market hours. We have our most active stocks, our biggest percentage gainers, biggest percentage decliners. Coming down here, I see 53 stocks made our percentage gainers list, 32 in the decliners. From this perspective, looks like we're lining up for a slightly bullish bias at the open. I'm going to take this list and filter it down to only S&P 500 companies. We want to take out any stocks in there that are low cap stocks, ETFs, leveraged products, closed-end funds, to see what's going on in the S&P 500 stocks. So to do that, I'm going to use the filters above. And here we have a filter in ETF. Let's drop it down. You get a list of ETFs to choose from. The SPY is the S&P 500 ETF. When you select that, like this, the list below will get filtered. Let me refresh my screen. I think my screen's now stale. Let's do that again. Choose SPY. The list below will get filtered for stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And here we see 4 stocks made our percentage gainers list, 2 in the decliners. Again, slightly bullish bias at the open. I do see some of the bigger stocks up here are down. Tesla down 5%, and that's already gotten pretty hammered this year, down another 5%. You were telling me, well, what's something with the batteries when there's extreme cold weather, the batteries tend to underperform like they usually.
Yeah, I guess it's like half. You get half the mileage out of the battery, and some batteries weren't even charging. Supposedly, Tesla Facebook groups were going crazy because this cold wave has spread across the country. I mean, I think it got into the 30s down as far as Florida. So Teslas usually can get up 250 miles to a charge, or get in like 125 or something.
Right.
You can imagine it's a holiday weekend, right? So there were all sorts of stories where people and batteries weren't even charging because of the cold.
Well, you need
You couldn't even get a
electricity.
charge.
Yeah, you need electricity. They want to save right now on the electricity on the grid. There are problems with that as well.
That, and I think I mean, this is my thought. I don't know if it's true or not, but it seems like, you know, Elon Musk is in the crosshairs of everyone now, right? Not that this wasn't happening on cold days before, but you know, it's getting out into the media much more. You know, he's no longer a saint, and he's more of a sinner. And you know, a lot of the media likes presenting. You know, this isn't a new story, right? This has always been the case with the batteries.
Yeah, yeah.
But it's getting a lot more publicity now.
Right. I'm just going to take a look at Tesla really quickly, and I'm going to come back to the pre-market report. As we're waiting for some questions to come in, but you could see here that
this stock's down almost 75%, huh?
Yeah, it's down a lot. So let me take a look here. So here's year to date down 65% versus S&P 500 down 18%. That's this year. You could see you know, just in the last 3 months, a lot of that down 55% in the last 3 months. And if we compare that to the S&P 500, you know, we're you know, up 4.6 months in that same period. Obviously well underperforming, but the 5-year, you know, look, that's impressive. In the 5-year returns, it's still really impressive. Obviously the last 3 months have been terrible for this company. And I think that, you know, they are seeing demand dropping off with the economy, you know, not just the Tesla, that there is demand dropping off. I think, you know, just in the car industry, because you have interest rates going up, right? And you have leases and finance that are very sensitive in that field, kind of like mortgages. I think I was reading that right now to finance a car, the interest rates are above 8%. Right. So if you're going out there trying to purchase a car and you're doing it through finance, you're going, you know, the interest rates are above 8% at this point to finance a car. That's high. If you're going through a bank, right, that's high relative to what we had it before. And I think that they take away the tax benefit for these EVs, or at least
No, I think they actually added to them. I don't know if that's come, you know, part of the the Inflation Reduction Act was I think
they capped it though at cars that are below a certain price, right? So
could be.
So yeah, I think the Tesla cars tend to be in the higher end, and if you're buying a Tesla like for $100,000, I think you don't qualify for that tax credit you used to get. Under 40, I forget. I don't know if anybody knows that. I think it's like maybe under $40,000 or $50,000, you still get the tax credit. But the higher end cars, I think they took that away. So we'll see. You know, they might have to start reducing some of the prices if they're seeing demand destruction. Let me come back to, and just to show you guys kind of like where Tesla is. We see here its P ratio 38, price to sales almost 6 times, right? So if we took their annual revenue, their valuation is almost 6 times higher than their annual sales, and they're trading $10 10 times their book value. And if you compare that to traditional cars, let's just for comparison, I'm not saying they are like Ford or General Motors, but let's just see how the divergence of where the traditional, you know, if the demand will fall and they go to like their, you know, where the traditional car manufacturers are priced, you know, you could see here General Motors, they're not even 1 time sales, you're talking about 0.3 times sales, and they're trading below their book value, right? 3/4 below, and you could see the PE way lower, 5.8. So there's, and I know people will make an argument it's not the same thing, but I'm just showing you from the relative valuations how far away they are from the rest of the car manufacturers.
Yeah, that looks like a value trap right there.
General Motors.
Yeah. Well, I'm saying it was everything you're talking about, right? If interest rates don't, if they stay high, their earnings could be hurt, right? I mean, it's going to be hard to sell a car at 8% interest at the,
Right. With Tesla's situation, it might be harder to sell cars with interest rates going higher. Also, Tesla, I think, when you're a growth company like Tesla, right, you rely on the secondary markets for financing. You need to raise money a lot of times to grow, right? Unless you could grow, if you're making a lot of money, you could grow organically. That's great, but a lot of times you're going to have to tap into those secondary markets, either sell stock, sell bonds, sell preferred stocks, borrow money from banks, unsecured debt. You're usually going out there and raising capital to finance your growth. And, with that, it's going to be tougher with interest rates moving higher. Okay. So that's another thing to think about, that, funding their growth is becoming more expensive, and it could even become prohibitive, right? It could go beyond that.
Well, what was interesting, because I think we were having a big Tesla discussion a couple weeks ago, and the price ranges for the Chameleon community talking about Tesla, where they would start to maybe dip their toes in. And I think Alex Abba was saying 100, and there he just said actually on the chat 100 was his prediction. I mean, it's getting close to some of the numbers, right?
Yeah. And if we do this, I'm just going to quickly, reference our comparative model. So with this model here, it's a simple pricing model. Of course, it's always hard to price or give a valuation to a company because you're making a lot of assumptions about their growth, their demand, their competitive edge, all this. You have to make a lot of assumptions. So putting a number on it is very difficult, and you could come up with estimates and ranges of, optimistic, pessimistic. But this simple model here, that's why I'm not creating a very intense model, because the more variables you have in it, the more assumptions you have to make about those variables, because the stock reflects what your future outlook is on the company, right? You could use kind of the past as some guidance, but what is your future outlook? And this model here, what it does is it takes the S&P 500 estimated growth, revenue growth, and estimated profit margins, okay? Because we're looking at future growth rates, future profit margins, and then it takes the estimated growth and profit margins of Tesla, and it says where, based on those numbers, right, where would Tesla be priced if you had earnings parity over a 5-year period. So if we assume this much growth rate in SPY, and right here we're assuming that SPY will grow its revenue. So S&P 500 revenue growth will grow at 6.3% year over year for the next 5 years. And in Tesla, we're assuming that the growth rate in revenue is going to be 47.6. That's based on some guidance that they issued, with they're going to have production increase 50% year over year. it fell a little bit here. So let's give them 47.6, which I think is a pretty, decent, generous estimate for Tesla, because that's pretty hard to do, to increase your sales 50% this year, 50% next year, 50% that, every year, 50% year over year. That's hard to achieve, right? I think for any company, that's really hard to achieve, especially, when you start getting very big. But let's give them that 47.6% growth year over year. And right now we're giving SPY operating margins, profit margins of 15%, meaning that for every dollar that they generate in sales, 15 cents is going to be a profit after all their expenses to generate that sale, right? Cost of goods sold, sales, marketing, research, development, take that out. They're going to keep 15 cents. And we're going to give Tesla 17% profit margin. Remember that profit margin, they hit that, I think, recently, but it averaged here 3 or 6%. So let's say 17% profit margin SPR. So you could see here, we're giving a much more generous growth rate for Tesla than the rest of the S&P 500. And we're giving a better profit margin for Tesla than the S&P 500. And then we say, okay, based on that, if, we start out with this as our revenue and we grow that revenue, right? We grow that revenue in SPY every year. And you could see here how we're projecting Tesla's revenue to grow from, you could see year 1 to year 5, 5 times. And if we say out of that revenue, they keep this much in profit and this much in profit in SPY, right? Based on these projections, if we just wanted earnings parity, right? The same return, in the S&P for every invested dollar in S&P 500, we got the same return for every invested dollar in Tesla. Where should Tesla be priced? Okay, so this is earnings parity. And that's with growth projections, with margin projections. Where would Tesla be priced if we achieved earnings parity? And that's here, 65.89, right? So that's how, again, this is my quick model and doesn't take into consideration maybe other factors in there, but the more factors you put in, anyway, you got to make more assumptions about those factors going into the future, right? So I'm just taking earnings parity comparison to get a sense of where it lies using that model. So that's how we are. And you can see how far away we are from book value, right? 1242. That's its book value, tangible book value, $12.42, 116. And if we compare that to traditional car manufacturers, that's way above, because usually those car manufacturers right now, what we've seen is that they trade below their book value. Okay. And it becomes important because, look, if you're trading this much above your book value and you need to finance growth, right? You don't, where do you get it? You don't have that much equity to put up, right? Where do you get the financing? And you could sell more stock. You could raise money using bonds, but interest rates are higher, unsecured debt, but interest rates are higher, preferred stocks, again, interest rates are higher, that's going to be reflected. Or do you have enough capital, cash flow coming in to finance your growth? And is it enough cash flow coming in to finance 50% growth year over year? Those are the questions people are starting to ask, I think. If there are no questions,
and really, like Kathy Wood constantly says, the value of Tesla isn't the car, right? It's the battery technology. It is the charging technology. It is the the driving technology. It's all these other things, and it's like, how do you monetize it, and how do you put a value on it, right? It's
right. It's she looks at it as a technology play, and as a maybe like an electrical utility, because they do have, I think, they're doing research on lots of other stuff.
And how much of that technology is in Elon Musk's, the jockey's head, right? Something happens to him. Where's the stock tomorrow?
Yeah.
Is it in Elon Musk's head? Is it, is there someone else who can run Tesla if there's an issue? There are all these variables which make it very interesting.
Exactly, because a lot of this was happening after Elon Musk took over Twitter, right? We've seen the stock just kind of go down, which may be implying that the market feels that his attention to Tesla, or to his other businesses, is now being shared, with and his focus may have switched to Twitter too much, right? To the point where maybe he's not even, as interested in these other businesses as he is trying to get Twitter back to profitability. Because when he took over Twitter, he said that it's in danger of declaring bankruptcy if he doesn't turn it around and make it profitable. He didn't exactly buy this company that's, just free cash flowing, and he could go in there and tap into its cash flow. And it's a similar situation. He needs to figure out a model for Twitter that it will be sustainable and grow. And how long will that take, and how much of his focus is going to be taken away from his other businesses?
Well, the one thing about Twitter for Mr. Musk was it was an advertising platform for him, right? He's used Twitter in an amazing way with his followers. I mean, he's been able to create a community around Tesla, the product. They've never paid, I don't think, for advertising, right? He has basically driven advertising this vehicle through his social network. I mean, it's something they don't touch on too much, but so he knows the value of Twitter for him. Yeah. And he thinks he can unlock that value for other people. And it's an interesting battle, but certainly like any battle, whether it's on land or in corporate offices, you only have so much time on each battlefield, right?
He's a human being, right? He doesn't have enough. He's a human being. He doesn't have enough. And there, I think, just very different businesses and different business model that your attention to Twitter and how do you get that profitable. And when you turn back to Tesla, it's a completely different model. How do you grow that business? So there's no real synergy. Maybe, like you said, maybe the advertising of it is a synergy, but he had that before he bought Twitter.
He had it for free, right? He didn't pay for an extra, Twitter handle or anything. He had it literally. Yeah. I mean, he stole so many products with the Tesla logo on it.
Yeah.
And it, when they were struggling to, make, extra returns, and it was incredible. And it's amazing. And the Twitter position has actually lined up, half the population against him on some sort of, political stand or something. I'm not even sure what exactly.
Then he he uses the product a lot too. It's not, he's not just like managing the company. He uses the Twitter a lot, and gets involved in, like, all these debates and conversations. And, he is a big user of Twitter. I mean, going back, it might have just been better if he used Tesla to buy Twitter. Like just take, convert, because a company can buy another company, right? He didn't have to like sell his personal shares in Tesla and then use those proceeds to buy the company. He could have just taken Tesla and made it, a takeover and just swap Tesla shares for Twitter shares. It seems like maybe that would have been a better merger. I don't know how they two relate, the two companies, but because what he ended up doing was taking his personal Tesla shares, selling them, paying, big capital gains tax on it, and then buying the Twitter shares, taking it private. So
yeah, it wasn't from a
finance point of view,
from a trading standpoint, it didn't diversify his risk. That's for sure.
Yeah, exactly. I don't know if he needed to do it that way. Maybe just make it use Teslas and merge it into Tesla somehow.
Actually, we're having Lauren, who is a fan of the Tesla product and has a lot of great insight. He says, how bad, is this, do you think this is concerning earnings? Like the earnings are going to be worse than expected and it's going to affect, the stock. He feels like this is people are trading in front of earnings. And he personally knows lots of people buying Tesla. Now he's in Europe, but Alex, who is in, I think, New York, he says he also knows people looking to buy Teslas now.
I mean, people are still buying Teslas. They didn't stop buying Teslas. I think that I think it's not going to be one, or I think what people are looking at, and we're going back here, is that it's not going to be one earnings. So a stock doesn't really get priced because of one earnings, right? That's not how, it's not just one earnings. It's how you think the company will do in the future, because even if you miss one earnings and do really bad in one earnings, but people are confident that you're going to still grow in the future, the stock will hold up. It's not going to get punished for one earnings if people believe that you're still going to grow much faster afterwards. It's more of that it's a combination of the valuation and, to hold that valuation, what kind of growth do you need, right? Is it, if Tesla grows at 20%, let's say it grows at 20%, that's still phenomenal growth rate, right? People are still buying lots of Teslas, 20, more than they were the previous year. It's, though, the valuation, right, becomes an issue, because you're like, 20% is great, but if you're growing at 20%, then how much, what kind of valuation should you be giving the company, right? And that's the I think right now what we're looking at is, how much the valuation has, stretched, and, what type of growth rate do you give it? And when you adjust that growth rate, where should the new valuation be, right? So I don't think Tesla's going out of business or anything like that. I think it's going to grow. And I think that even at this valuation, the markets do think it's going to grow. It's going to grow still pretty quickly. I think that what everybody's looking at, and this is the hardest part, nobody knows how much Tesla's going to grow. Nobody knows what type of profit margins they're going to have. These are all estimates, right? Everybody has a model to estimate it. And there's no magic model that could give you an exact number. And this is the battle, right? This is the battle going on every day. People are using their models to create new estimates, and future projections, and that's where the valuations are moving.
Well, this was a great discussion, Dee. Rob did have a question about maybe looking at some Tesla option ideas if you're bullish or bearish, or think the stock will just sit. Maybe we can look at that tomorrow. Awesome job, my friend.
All right. Thanks everyone for joining. Stay safe out there. Have a great trading day. Hope to see you guys tomorrow.